if we pull into exactly where some of the big deltas are, it was in the capital market side, on the trading side of things. JP Morgan kind of set the bar high yesterday by beating expectations in trading, and pretty substantially, whereas B of A missed expectations. And so given that setup from JPM, B of A's capital markets revenues looked like a pretty big disappointment.
I'm reminded by something that Larry Kudlow always says, and that is earnings are the lifeblood of stocks. What we are seeing is, exactly what we expected. That bar was set so low so that, it's not going to take all that much for these companies to beat. Now, the one thing I will say is that as these financials come out, break down those numbers, and something that Rick might even have noticed is the fact that the trading numbers are actually a lot bigger. So these companies, these banks, these financials are making money trading throughout all this volatility. It's something that doesn't really translate into growth down the year.
This is the beginning of a multi-year bull market. Generally, bull markets last longer than, let's see, this one's about 9 months old. Generally, they last longer than that. I think this one will too. So I'd say there's two components, and one's sort of ironic and the other one's sensible. So the ironic one is the slowdown in the economy has gotten people bullish, because the government has already said that if they can't meet their targets, they'll do more. And these numbers infer they won't make their targets unless they do more. So I think there's probably more loosening of monetary policy and more fiscal spending on the back of these numbers. So that's the ironic thing. It's like the U.S.
Bad news is good news.
Bad news is
right.
good news. Now, the sensible thing, which is, I hope I'm not bragging, but the reason I like China is that there's another side to what they're doing, which is reform. The reform across the board, from the government to the private sector, but for me, the most important thing is the state-owned enterprises, because they're 70% of market cap, and they are making them better-run companies. And ultimately, what moves share prices is not GDP growth, that kind of stuff. It's the cash flow that companies generate, and that's going to go up as a result of reform.